Bitcoin's bullish turn. Why on-chain metrics are signaling accelerated price appreciation. As Bitcoin breaks out of post-halving consolidation, on-chain metrics signal an upcoming upward momentum. November 2, 2024. Historical context, Bitcoin halvings and price movements. Bitcoin's halving events are perhaps the most critical catalysts for major bull markets. Historically occurring approximately every 4 years, these events reduce the block reward given to miners, effectively halving Bitcoin's new supply. As the supply issuance decreases, the fundamental scarcity increases, creating a strong upward pressure on price when demand stays the same or rises. The latest halving took place in April 2024, and while price appreciation in the immediate aftermath was not as pronounced as previous cycles, we are now beginning to see familiar patterns. Looking at past cycles, Bitcoin has typically experienced a period of consolidation post-halving, which has been painful for traders and long-term holders. However, once this phase dissipates, price appreciation tends to accelerate significantly as on-chain momentum indicators flip bullish. Current metrics, what the data is telling us. Analyzing the chart provided, we see several key on-chain metrics in play, including the Miners Position Index, MPI, the S2I price model, and the monthly issuance MI, base supply burden. Let's break down what each of these metrics is currently signaling. 1. Miners Position Index, MPI. The MPI is a crucial indicator that oscillates between periods of miner profitability and miner distress. When the MPI is negative, it signals that miners are under pressure, usually due to lower revenues relative to operational costs. These red zones on the chart often correspond to periods of price consolidation or miner bearish trends. Conversely, when the MPI turns positive, it indicates that miners are comfortably in profit, which tends to align with or precede bull market phases. At present, the MPI is emerging from a red zone, hinting that the worst of miner stress may be behind us. As miner pressure alleviates, the selling pressure from this cohort reduces, removing a key downward force on price. Historically, this shift has been a precursor to significant price increases. 2. The stock-to-income S2I model. The S2I model is another invaluable tool in predicting Bitcoin's price movements. This model, which borrows principles from traditional commodities like gold, measures scarcity by calculating the stock-to-flow ratio, available supply versus annual production. The S2I line on the chart represents an optimal price that Bitcoin should aim to reach post-halving, adjusted for reduced issuance. In the current cycle, Bitcoin has already caught up to the S2I price target, mirroring patterns observed in previous bull markets. What's even more striking is the fact that this run-up to the S2I price often results in a new all-time high ADH, as seen in past cycles. This behavior suggests front-running by investors who understand the impact of scarcity, leading to a natural upward adjustment in price. The current setup implies that once momentum solidifies, a new ADH could very well be on the horizon. The macro picture, monthly issuance, MI, and supply burden. Another essential element to consider is the monthly issuance-based supply burden. The MI metric, which tracks the impact of new Bitcoin supply on the market, has historically influenced price movements. As issuance falls after each halving, the market's ability to absorb new supply becomes easier, reducing the need for significant downward price adjustments. This diminished burden acts as a tailwind, supporting higher price floors and accelerating bull phases when demand outpaces new supply. The current MI suggests that the market is transitioning from a supply-heavy environment to one that is more favorable for bullish price action. Coupled with the MPI and S2I model, it paints a compelling picture of a market that is ready to move higher. Understanding momentum shifts. Momentum is a powerful force in financial markets, and Bitcoin is no exception. The chart shows that on-chain momentum is about to flip bullish, which, historically, has led to significant price acceleration. During previous cycles, the bullish momentum shift marked the beginning of parabolic uptrends, where prices increased rapidly, catching many market participants off guard. Several signs point to this impending shift. Bullish divergences. On-chain indicators, like the MPI, are forming bullish divergences, where price action does not match the negative sentiment among miners or other participants. Such divergences often precede trend reversals. Reduced supply pressure. The halving event has already cut new supply in half, and miners are becoming less inclined to sell. As the MPI turns positive, the absence of forced selling creates a more favorable environment for price increases. Demand dynamics. Despite macroeconomic uncertainties, Bitcoin's adoption and investor interest continue to grow. Institutional players, long-term holders, and retail investors all contribute to a strong demand base, further supporting the bullish thesis. Why scarcity drives price appreciation. At the heart of Bitcoin's value proposition is its scarcity. The supply cap of 21 million coins ensures that, unlike fiat currencies, Bitcoin cannot be inflated. The halving mechanism doubles down on the scarcity by systematically reducing the issuance rate. This scarcity-based model is the reason why Bitcoin's price has historically caught up to the S2I price target and even exceeded it during bull markets. The concept is simple. When demand outpaces supply, prices must rise to reach equilibrium. In Bitcoin's case, halvings reduce the supply side of the equation, and the subsequent increase in demand drives price appreciation. As the S2I price model suggests, Bitcoin's scarcity should continue to exert upward pressure, particularly during the bull phases. What to expect next? Potential price trajectory. Given the current setup, Bitcoin appears poised for a significant move higher. Once on-chain momentum turns bullish, the following stages typically involve rapid price acceleration, driven by a combination of reduced supply pressure and increased speculative interest. Here's what to watch for. Key resistance levels. In the near term, expect Bitcoin to face resistance around previous ATHs and significant psychological levels. The S2I model suggests that these levels could be surpassed, potentially leading to a new ADH. Support zones. Critical support levels include the MA cloud and key moving averages, which have historically acted as strong buy zones during pullbacks. These areas will be crucial to watch if a short-term consolidation occurs. Price discovery. Once Bitcoin breaks above previous highs, it enters a phase of price discovery, where the upward potential is determined by market demand. This phase is often the most explosive, and could take Bitcoin to unprecedented heights. Conclusion. The bullish case for Bitcoin. Bitcoin's market cycle is entering a critical phase. As post-halving consolidation wanes and on-chain metrics shift bullish, the stage is set for significant price appreciation. The combination of reduced supply pressure, bullish momentum, and the S2I model's price target indicates that a strong upward move is highly probable. While no market move is guaranteed, understanding the historical patterns and supply-demand fundamentals gives us confidence in the bullish case. With scarcity driving demand and the halving impact fully setting in, Bitcoin may soon embark on a powerful bull run, rewarding those who remain patient and well-positioned. This time, as before, the market will likely do what it does best: catch most participants off guard. Those who understand the power of Bitcoin's scarcity, coupled with on-chain metrics and historical cycles, stand to benefit the most. Keep an eye on the charts, and brace for what could be an exciting and rewarding market phase.